I'm going to explain step by step a strategy to double up the winners in 2025, and there is no profit target in this strategy. Okay, Tata. So let's straight understand the strategy. Now I will be showing you with a clear diagram step by step, and then I'll jump onto the live chart to see exactly how to apply that strategy. It's a simple, but you need to understand it, and once you understand it, it cannot be back tested, as it is a strategy that only to add to the winner. So once you learn that strategy, the best way is to apply in a demo account so that you understand it in the live market. So with that said, let's begin first of all to understand what this strategy to double up the winners. So now to trade this strategy, the first step is to understand when the smart money trading the market, that means that order block. Now to find an order block, the first step is to understand when the market changing its trend, because when the market changes trend, it's a fresh market to buy or sell. Now if you look at here in this area, as there is always a reversal pattern when there will be a change of trend. Now the very common reversal pattern, one of them is double bottom. It can be any other form. Now we will be considering in this example as a double bottom formation. Now once we see that double bottom, a very strong breakout from the double bottom, which is a sign that the smart money has bought this market after this double bottom formation, and there is a strong impulse, bullish impulse, that the candle has closed or multiple candles above this level. And once we see that impulse has done, we will be waiting for deeper pullback. Now this pullback is the first profit taking after the change of trend. Now once we understand that, we know that there was a reversal pattern and there is a neckline of this reversal pattern, which is the previous resistance line, which is considering as an order block where the smart money started to buy this market. Okay, so once we found that pullback, the first job is to place a pending order just above this swing high, and we will place the stop loss just below the order block. This is the first trade that we will be placing as a pending order in an uptrend. Now if this is a fake out, which more often we will see in the market, we might see that this market didn't break this swing high. Instead, we could see dropping back down and trending in that direction. In that case, we will not be entering in the market. But in case we see the market manage to break this swing high, at that point, the trade will be active and we are on a buy trade. Now in this strategy, we will not be placing any profit target. That's the secret of this strategy, as there will not be any profit target. The sky is the limit. As you know, when a trend aggressively moves, it goes a lot, and that's the secret of multiplying the winners. Now this is not all, there are more to it. Let's look at how we will be doing that. Now once this trade active, as you know that in a trending market there is a rhythm. A rhythm is everywhere. In the nature there is a rhythm. In human being also there is a rhythm, right? So sometimes we are at high, sometimes we are at low, and in the market also there is a rhythm in it. Now if you look at, you can see this is an impulse here with this impulse, and then we'll see that pullback, which is the profit taking. Now in the next pullback, when the price is here as our previous entry here, we'll place another pending order in addition to the previous one, and our stop loss will be just below the previous swing low. And now we have two trades. once we see this pullback is over, we could see the market has bounced again, and as soon as it will break this swing high, we could see that this trade is active. Now our job here is to do the risk management, guys. Keep in mind that risk management is the heart of everything. So once we see that second trade is active, as soon as the second trade is active, the first trade stop loss will be moving to the entry. Now by doing this stop loss moving to the entry, we are making the first trade completely risk-free. While we are running two trades, we can see that only we are risking one trade, but the take profit target is open. And that's how we will keep doing as long as the market is doing. As long as the market is trending, we'll keep adding position, and every time we'll be adding one position, we'll bring the other one at entry. Now this is how we will be adding more and more winner while the market is wild, trending in one direction. Now as there is no take profit target in this strategy, then how can you take profit? Well, we will keep running those trade and running all those trade, moving the stop loss at entry. And as you know, the trend will never move in one direction forever. At some point, we could see the market started to reverse. And once it will reverse, wherever the trade is, we might see 5 trades, 6 trades, or 2 trades running. It will just come up and take us out of the market with all the winners. And let me show you now in real chart examples to see exactly how to implement this strategy. Okay, so we'll be looking at this example on British Pound US Dollar to see how it is doing. Now looking at British Pound US Dollar, you can see this is a downtrending market structure creating series of lower high on GBP USD. And at some point we can see that after this consolidation, the market formed the double bottom, and then there is a strong breakout from that double bottom, leaving a neckline which we are discussing about as an order block. Now once we identify the order block in that area, which also acted here in the support here, resistance here, and as the market managed to break out with a stronger momentum, we can see that there is a pullback, narrow pullback. And as we will be waiting for the market to break that swing high, now once we identify the pullback, we will be placing the pending order just above the swing high. Stop loss will be placing below the order block. Now once we see the order block is specified, our pending order is here, we will see the market already triggered the trade. Now once the trade is triggered, we might see, as you can see, there is a drawdown here, and it is very important that we do risk management so that we allow that drawdown, which is an inevitable part of trading. Now the next job is not to place any TP, but let the market move by itself and waiting for another swing high. Now you can see that once the trade is triggered, we saw another move, the market drop again in that area. Now every time it will create a swing low, we will be placing the pending order above this area. Stop loss will be below the swing low. We see that now we have seen 2 trades active at the same time. We'll be waiting for the market to bounce. Once we see it has gone back up, our job is to move that previous trade, stop loss at entry. So this trade running in profit, but it's completely risk-free. Now once we see that the market managed to break out here with this stronger momentum, our job, as we mentioned, every time it will create a new higher high, we will be placing the pending order. Stop loss will be below the swing low, and we'll keep running those trade Now, if you closely look at it, you can see that when the market trend, it just take all those trade in the winning position. Now guys, as you can see that when you understand the concept of adding to the winner with proper risk management, this is the real way to trade the market so that you can maximize your winner in 2025. Now let's look at some more examples to understand how to apply this strategy. Now let's look at this example on XAU USD in the same way. Now you can see this is also a downtrend, and we have seen there was a consolidation, and after double bottom formation the market managed to break out. We have seen the deeper pullback and then strong rejection to the upside. Now this is where we can see that order block formation. As the market formed this double bottom with a higher low, the market managed to break out. As it has broken out of this resistance line, we know that this is an order block which also acted here as support resistance, and the market penetrated with a stronger momentum. It managed to break out, which is a sign that the smart money buying that market. Once we see that pullback, our job is to place the pending order above the swing high and the stop loss below this order block, which is in that area. And as the market started to progress, we will see that this trade is active. And once we see the active trade, as we don't have TP, we will be waiting for another swing high formation and then pullback. Once we set that pullback, our job is to place another pending order above this high, stop loss below the swing low, and at the same time we will be bringing this stop loss at above the entry. So this is a risk-free winning trade. Keep running, and we will be placing the other one also running, and in this way we can keep running the winner with a reduced risk each time a trade is triggered. I hope that you understood it. If you have any question, don't hesitate to ask using the comment section. So with that said, thank you very much for joining this important educational lesson on how to multiply your winner in 2025. And thank you, and I'll see you soon in my next lesson.